Well, welcome back to our 7th anniversary celebrations, and the Maverick himself, Shankar Sharma, with us in our studio. Shankar, thank you so much for joining in, and really appreciate you taking the time out on this very special day for us.
It's a very special day, and I'm happy to be here. Congratulations.
Thank you so much. Why don't you just take a moment, Shankar, and come in and sign this wall with your wishes for the channel.
I hope you can make out my writing, because my mother could never.
Okay, Shankar Sharma saying his writing is bad, but well, from the looks of it, it seems all okay. Are you saying you're ambidextrous, Shankar? Okay. That's Shankar Sharma, well, the man himself, and you will hear him in moments from now speaking about his thoughts on the markets on our 7th anniversary celebrations. Great. Thank you, Shankar. Thank you so much for these wishes, and thank you so much for joining in the studios as well. Let's just go in, and meanwhile, as we just get ready to hear out Shankar Sharma, I think important to take stock of one more very important corporate voice, the stock that has been on everybody's radar, that is Yes Bank. And Rana Kapoor was speaking to us earlier. Shankar, we can head here, and why don't you take this chair? Yes, please. And yes, I was talking about Rana Kapoor, Yes Bank. I think the stock, the banking stock on everybody's radar. And I spoke to him yesterday and begin by asking him whether he is disappointed that the expected trajectory of rate cuts that was earlier envisaged has not worked out. Hear out a slice of that conversation.
No, if I have to take a step away to answer this question, that the fact of the matter is that yesterday the Federal Reserve, board governor, speak. The fact is the global economy is still in the doldrums, right? The fact is that there is sluggishness in the world's #1 economy. There is slowdown in the world's #2 economy. There's barely any pickup in Japan and Europe, right? So in my judgment, the global forces remain, subdued. #2 in India, the only thing that bothers us excessively in my assessment is the CPI movement of, food prices, which is very seasonal, is somewhat to do with import and distribution policies, and it should not bother us to see 15-20 basis points of shift in the CPI. The fact is that India needs a lower interest rate regime to get growth going, to get the impulses of industrial production, manufacturing somewhat more catalyzed going. To me, is absolutely at a stage where it becomes very pivotal to restore rest of the economy. I think the services economy is doing better. Hopefully, if the Met forecast becomes reality with the right landfall after a very good rainfall forecast, to me means that at least there is a little impetus in the rural economy, and the government is paying a lot of attention to the rural economy. And I think the overall manufacturing sector in some parts is doing very well. So in a sense that today the economy is well geared, I have every reason to believe that a lower interest rate regime which India needs to get its growth back. Inflation is under control. We get too distracted by a few basis points here and there, can be harnessed. And the third factor, which is very, very pivotal, which RBI has done a superb job, is to make sure that there is abundant liquidity in the system and none of the banks are hampered from any form of incremental lending. So a lot of, let us say, stars are lining together for a very good second half in our economy. And I think the next 2.5, 3 years should be fantastic performance. I won't be surprised if we exceed 8% this year of GDP growth and nudge towards 9% by 2020.
That's what, inshallah, as they say. But so still, just getting back to my question, so you think headline repo 25.50 or more for FY17?
See, judgmentally, I believe it should not be, our economy should not be more than 5% repo.
Wow, okay. Even if that were not to happen, with the liquidity measures that you are saying, do you think deposit and lending rates come off 50, 75, 100 bips in FY17 itself?
You see, it's already happening. I think the fact of the matter is, please remember, we complain about not enough transmission, right? The fact is, this bank rate, MCLR are all very good, transparent developments. But please remember, there is an extraordinary cost which nobody, talks about in a sense of interest rate movements, which is like the provisioning cost. So banks have to deal with the provisioning cost, and therefore, once this provisioning cost load goes away from, whatever larger public and private sector banks, to me, that is going to alleviate and move towards transmission to lower rates. That will happen. But this is a, right now, very awkward situation where a lot of provisioning is still to be made in some banks. And I'm quite happy to share with you that in this backdrop, the overall confidence in Indian banking after the measures taken over the last 3-4 quarters has really gone up. I've been meeting investors in the US, in Europe, and also in Asia. I must confess that people are saying at least the banking system in India is being repaired super fast.
Wow. So you're meeting investors. Are we to presume that the proposed fundraising is just round the corner?
So Yes Bank has been ready for fundraising for a while.
Yes.
But we have reason to believe that there are certain triggers in the system. We like to believe a bank like ours is a growth story. We've done respectably well on preservation of asset quality. We have demonstrated steady growth. Our overall, granular growth of liabilities is pretty on the spot. And the diversity of our loan portfolio driven by more accretive SME growth, retail growth, and lower risk corporate growth augurs very, very well for a capital raise because we have to invest in growth. Yes. So we are in a state of preparedness that within this fiscal year, and still like 9 months to go, that we will raise, our target is to raise $1 billion. Yes. And in our life cycle, it will be a very important event because then we become a small, large bank to partake in India's growth story.
You're again being modest, Mr. Kapoor, but this was anticipated. I mean, your tier 1 10.7, everybody believes, and I believe you yourself internally would have.
Overall cap at is at 16.5.
Yeah. No, and anyways, the growth targets internally also, I believe, would be northwards of 2025 for the next 4 or 5 years. So you'll probably need this capital as well, and it's probably not even ROE dilutive. But my question is this: so if indeed you raise this capital, I have no doubts that you'll be easily be able to do it. You reckon that for Yes Bank, for the next not just 3 years, but arguably for the next 5 years, a superior growth rate, northwards of 20, possibly 25, at a stretch maybe even a 30, is a distinct possibility?
I think we have entered a life cycle, let's say inflection point. Some people call it a sweet spot. It's happened to one other bellwether stock in the country. And when they were like our size, or rather we were their size, so we hit that sweet spot. And the beauty is that we got now critical size, critical momentum in our retail, in our SME businesses, and we are a proven bank in being fairly supportive and fairly resilient on asset quality, even vis-a-vis corporate businesses, mid, large and small. So I think with this equation established with a demonstrated track record, Yes Bank is probably one of the finest growth stories in Indian banking right now. Our brand is doing well. Our frugal innovation is doing well. Our HR is resonating in terms of quality of people, quality of leadership, top, junior. Average age of the bank is 31 years. And then we are building more and more refreshed technologies, service technologies, which are of a bank which is considered to be an innovator, not only in India, but actually in the world today, as a bank which is driven by quality and by innovation and at a frugal cost, so that we can serve even our inclusive requirements in our country. So I think there are a lot of propellers, a lot of turbo engines in the bank, which augur well for a good growth cycle. And we should grow 27 to 30%. The management team is convinced, the board is convinced, and we should do even better in some parts over the next 5 years.
That's a telling statement. And you forgot hard-working team, because I can vouch the leader is indeed working very, very hard. But I still...
Our mantra is very simple in in Yes Bank? Very simple. Harder you work, the luckier you get. And that applies to Yes Bankers, it applies to our shareholders.
Okay, great. Okay, but shareholders don't have to work hard if you are doing this.
They're working hard and investing in the right place at the right time.
That they are, but they will want to know whether this fundraising would happen latter half of FY17 or immediately. When do you reckon?
There are certain global event risks which I think should be out of the way very soon. There is the Met forecast, which is a very significant trigger in our system. There's a credit policy which is going to be also very, very critical, I think early August. So there are some material events. We have to observe all these events. We have to do another 1 or 2 quarters to show how good our asset quality is, how good our earnings trajectory is, how sustained our growth is, and how well are we consummating our growth model, because Yes Bank is now a small, large bank in India.